going to start off with a quote. It's tough to make predictions, especially about the future. That's Yogi Berra. So having quoted Yogi Berra, I think I'm going to make a prediction. We're in a bull market in gold. And I think confirming everything, Jay, you said, and I guess the only thing I can add to that is that the other comment you made is that in a bear market, stocks go down, juniors maybe you're talking about, go down average 80%. Let's hope to God it's a bull market. Get this, forward-looking statements. We have two projects. I'm going to focus mainly on the CLAVOS Go project, but we have two near-term production projects. CLAVOS is our gold property in Timmins. Now, just a little background. When I got involved as an investor in Sage about 8-10 years ago, we were an exploration company, and we had quite a lot of success exploring. Our market cap went from very little to about $40 million. As you probably all know, we had a major correction. And at that point, we looked at each other and said, okay, it's wonderful. Exploration is exciting, it's terrific, and great mines are being found. On the other hand, there is a practical part of mining. And before we get the next real bear, we want to actually own some assets and be a producer. So we're lucky enough to pick up a property in Timmins from St. Andrews Goldfields. And it was a very low price. It was because the environment was a bit of a giveaway environment. And it was a mess. They'd messed it up. They hadn't mined the right mining methods, et cetera, et cetera. But we diligently went through. We did a resource. We did a PEA. We spent about $5 million organizing. In fact, it took us 2 to 3 years to find the core. We said, there must be core. Well, we went to the mill, which is 10 kilometers away, the stock mill, and the superintendent said, when are you going to take away your core? We said, my goodness, we've been looking for that core. So it took a lot of work to put together. When the market changed, we did a resource financing of $11.5 million, $1.85 million in equity, about $2.4 million into repayment of debt, and the balance into CapEx. So St. Andrews spent over $60 million on the project, and we're only going to spend $7.2 million putting it back in production. So the economics to us were screaming. When they put it in production, gold was $600. In Canadian funds, as we all know, even with a dip here, it's about $1,700. So that's not the only reason, but that's one of the reasons why it's very economic. We've got a board of people who have had a lot of experience in the mining business. I started in the financial business. I went down to Brazil, got mining in Brazil. This is about 30 years ago. It was exploration, but we went into production. And that changed our lives. And about 8 years later than that, we were listed on New York Stock Exchange with a market cap of about $2 billion. So you can start that way, but the truth is that we acquired a lot of assets down there, a lot of producing assets, and that's how we grew. The other one I'd like to mention, and they're all very capable people we have, is Bob Ritchie. Bob Ritchie is the general manager and the project manager of CLAVOS. Highly experienced. He ran Hemlo for a while. He was in the mining constructing business. He's put mines into production in Chile, in Brazil, in China even. And he built the St. Andrews mill, which is a stock mill now owned by Primero. It's 10 kilometers from us, and we're going to be sending our ore to that mill. In terms of shares, 68 million shares outstanding, 17 cents. We have a $12 million market cap. I don't think I have to say that Timmins is a great place to be in business. The infrastructure is there. We're permitted for 700 tons a day. We're projecting 600 tons a day in production over a 7-year life. We have a life of the mine agreement with Primero, the stock mill, 10 kilometers away, private road. We started in January with dewatering. The infrastructure goes down about 300 meters, so we're dewatering right now. We're rehabbing behind it, and next week we'll start to definition drill. And we want a definition drill for an extended period, developing stopes, with the idea that we should be delivering ore to the mill in September. One of the kind of exciting things, well, here's a little map to put us, there's Sage, and below that in yellow, there's Primera Gold, and Kirkland Lake, it was St. Andrews, Kirkland Lake structure is the other side, and of course the great Timmins mines on the Balanced side. The mineral resource, about 316,000 ounces, about 4.8 grams average. I think what's interesting, besides the fact that if we succeed, and I believe we will, and put it successfully in production, we're on target, we're on time, is that there are 3 ways that we're going to increase our resources in production. One is we have 1,000 intercepts, which were not included in our original resource, but they are above the cutoff grade needed to put in production. That's number one. Number two is that we've been drilling, exploration drilling from the surface, what we describe as the gap, if I can make this to change. Can you help me with changing it? And that is a gap between the main zone and the 960 zone. We completed the drilling very recently. The results will be out. What we were trying to do is determine whether there's a corridor of mineralization so we can go from the main zone to 960, and that we'd be mining in ore rather than waste. And there you can see there's a diagram, the main zone and the 960 zone. So we've been drilling, and we call the gap between the two there. And the next one, probably of all of them, the most exciting, not included in the resources, but in a limited amount of the records we got, surprisingly enough, because it was a mess. There were some high-grade Kinross holes, and you've got an infrastructure going down 300 meters. And this is from, we were given information on drill holes down at about 650 meters, and one of them was 65.3 grams, 4.2 meters. That's a hell of a hole. And recently, we've discovered a lot more information on those drill holes. There's obviously a very high-grade series of high-grade holes there. And they go from about 285 meters down to 650. And what's interesting, of the 100 intercepts that we've received and we now have, 46 of them are at about an ounce or above in grade. So there's obviously a very high grade zone there. So as we dewater, we dewater down to about 150. We expect the beginning of June to be down to 225. And then we're going to be drilling down into that high grade zone. I can only think between those two factors, drilling in the 3 factors, the 1,000 intercepts, the gap drilling, and that we're going to increase the resource. And we have an ability also to increase our production because the mill has additional capacity. There's some PEA numbers. I ran through them. It was done at $1,500 Canadian. We're now $1,700. We've pared down the CapEx from that. We will be doing a new resource study when we complete our drilling, number one. And number two, we're going to do a pre-feasibility. The other property I'll briefly mention, it's a VMS property. It's in the Geraldton area in Ontario, which is not too far from Thunder Bay. It's a big VMS system. We've proved up what we think is a stringer zone of copper, gold, silver, with an interesting 2% copper on the surface. We have another historical zone, which was drilled by Noranda, and that has zinc and copper and gold. There's a main core there. If we ever find one, it's terrific. The message I want to get over today is that CLAVOS itself is going to be in production. It's very low CapEx. It's fully permitted, 25,000 ounces. If we can increase the resource, we will increase production. And in the area, there are 3 or 4 other deposits in that 200 to 400,000 ounce basis that we think would be very attractive if we acquire it. So our picture out there is that we would like to try and aim to be a 100,000 ounce producer in 3 to 4 years' time. Thank you very much.